Hello, everyone. Good morning. Morning, Zach. Morning, Haroon. How's everyone doing? Put this back on. Yes, I'm great. Okay, right into the hourly. If you've been on my Twitter page, you'd have seen I've been calling this intermediate term high / daily high. Well, it's a high on the daily chart, that's why it's called daily high. It's not like a previous day high or anything. But we had this consolidation. Yesterday we swept it, then we swept it again, and then we swept it again today. It's our low day so far, going to the 9th of February's new week opening gap, which is this week's new week opening gap, and then we rallied. So there's 3 drives lower. Rally was a non-farm payroll event, took out the previous day high. Now you want to see it find support off of lower time frame PDRAs like 15-minute fair value gaps, 5-minute fair value gaps, and run through it, ideally to fulfill the intermediate term high of the market make buy model. That's my ideal scenario. And because it's an intermediate term high, once we breach this, you would look at the next draw. So it would be from here, you can go to the new week opening gap low, you can go to the new week opening gap consequent encroachment level, you could go to the next inefficiency, but really you should break it down on a 15-minute chart instead. So once we break this intermediate term high, what else is there on the left? We have this high, above that inside the new week opening gap, that inefficiency. So we could look for those two. It's not the best continuation scenario, because the best continuation scenario would displace above this high, and then you'd see like a fair value gap through it, trades down to the fair value gap, and runs through, or leaves the fair value gap alone and runs through. This is taken over with a wick, but because this is the effect of a non-farm payroll event, which began from here at 8:30, we saw nothing that's invalid for longs. Like, I don't mind it leaving the wick there, because this run up was the impact of non-farm payroll, and then it's left liquidity here. It's left this high to engineer liquidity there, in my opinion, because this is like a retail resistance zone, you know. Spools a little bit, find support at this fair value gap inside the new day opening gap, and then run higher, ideally. But we're going to look at the 9:30 open and make our full read from there. I'm bullish overall. Take this previous day high level off into this daily high. If you're wondering what the levels on my chart are, the low of the day was formed inside the 9th of February's new week opening gap high. Then you have today's regular trading hours new day opening gap. The reason I'm using regular trading hours new day opening gap other than the regular new day opening gap is because this is a very small new day open, so I don't really consider it one that's, you know, there's no point in using that because it's only a couple of handles wide, so I'll use the regular trading hours one. This is just the regular trading hours settlement price, so if I go to the regular trading hours chart, you can see it's just the settlement price. So that's part of the opening range gap as well. You can see we're in a little bit of a tighter range now. That's good because it means 9:30 ideally is going to have a lot of liquidity to purge, hopefully in the direction of the buy side. Good morning, C-Song. Good morning, Mr. User. I don't know how to say that name. Morning, Nehemiah. How you doing, sir? Right, I'll take a look at that 5-minute S&T you're talking about. I don't see the S&T. Unless you mean YM. I don't really look at the S&T with YM, to be honest. I used to, but I don't anymore. They're trying to press the opening range gap. Well, we'll wait and see what the opening range gap is like. MNOP is midnight opening price. So it's the opening price on the midnight candle. So if you look here, this is the midnight opening price of today. And then the February MNOP is the midnight opening price of the month. Way back, whenever that was. Okay, all set up for the open. Just gonna wait, let it happen. Waiting for the open. Let's just talk about the economic calendar then, since we've got 3 minutes. It's a very weird week because CPI Friday and non-farm payroll was delayed from last week's Friday to this week's Wednesday because there was a partial government shutdown. Although that was quickly resolved, the non-farm payroll data was still delayed to this Wednesday, which makes it a very different and unordinary week because we don't normally see that. And that's made it difficult for the weekly profile to form how it regularly would. And you can tell because yesterday's, well, not just yesterday, the consolidation from Monday and yesterday, well, it was just insane compared to the ranges that we were getting on the days before that. So we're coming out of massively large ranges. Then we fall into consolidation for multiple days in a row when the economic calendar suggests we're likely to see that. So yesterday with that, not yesterday, this week with the non-farm payroll being on a Wednesday, it's a bit of a different type of week. Yeah, I'm in open press. What's that number? chilling, sipping some electrolytes. Raspberry flavor. That's a nice color. It's okay, this is a very large opening range gap from the low here. It's 233, and then from where we're currently trading, it's going to be about 200 handles. So ideally, there's some support from the upper quadrant, but even if it's going to be consequent encroachment, that's valid. The best case scenario, of course, will just be a nice touch and go straight into our buy side objective. Let's do that. A really good 5-minute fair value gap here, and also this 5-minute bounce price range. If we're going to overshoot a fair value gap and we have a bounce price range right beneath it like this should be the stopping point where it doesn't want to go very deep into it. That's exactly what's happening. Oh, the Nasdaq. Also, I wouldn't look for a black belt today. So if you're looking at this, like the pre-market low just got, sorry, the pre-market high just got swept here at 9:30, and you're thinking it's probably a black belt. Because I want to see it trade up into this intermediate term high, I would rather it doesn't give us a black belt. So I'm not leaning on that, where I normally might. I'll see the order block give it support. And ideally, it doesn't need to drop down to the opening range gap high. Ideally. You can measure this move lower. Oh, I wouldn't actually. I wouldn't measure that move. The draw's pretty obvious anyway. For me right now, at least. That's not a first presented order block, because it's not post 9:30, it's just a regular order block. Okay, the opening range gap high is also 9:30 opening price, so I would like it to show sensitivity here and respect the order block. It's not a great close. Still, we're in a discount. Yeah, it's a little bit slow. Because we've got an opening range gap drawing us lower, and we've also got a bullish draw, that could be a little bit more back and forth. Okay, takes out the low, trades back above the opening range gap high. So that's good sell side damage. To really solidify this move, now you will need that to change the state of delivery. See if we can get that. If this is black belt now, I'm going to look like I can't even trade my own model. That's yesterday's AM session. First presented for value gap. Yeah, that's my thoughts as well. Because it's a large gap. 200 handles almost, I think. What is it? 183. Upper quadrant is always there for support without needing the consequent encroachment. Hey, what's up, man? Mr. Shrek. Turn that off. Still not first presented. It's better to chill. Do this one. Yeah, start the break on the 5-minute. I just want to look at the. Okay. I like it because it's OT on this leg. And it's a reaction from yesterday's first presented. But I think we need a few more candles before looking at higher prices yet. Because it's close enough to consequent encroachment where it might give in a little bit more, take consequent encroachment, and then find support from this level instead. Potentially. Well, the S is a lot smoother today. Okay, that to me is first presented bearish order block. So first presented. One of these. Yeah, this is so aligned with consequent encroachment. By the way, I know we have the data low, but I'm strongly bullish, so I don't want to see the data low taken. If we invert the first presented order block, that's really strong. But these are, you'll see that they're hard to invert without taking liquidity. Or just satisfying an objective like consequent encroachment of the opening range gap. Okay, that's not strong enough close to really give a good direction there. Because it's in the upper half of this, it's in the lower half of this. So you're fighting between two PD arrays. Just give it some time and we'll see where it wants to find support, what it wants to invert, what it wants to do. See, if we can close above this, that's nice and strong, in my opinion. Okay, it's not an inversion yet. It did close a little bit above mean threshold, but that's still not enough for an inversion. Take the middle line off. And I'll fade this. Remember that is a Sibi as well. Kind of on the back foot here, because I want higher prices into this high. We've swept the buy side and gone away from that. This is effectively a black belt that would have already paid you a little bit. Not that I would recommend trading that model today. But the conflicting thing is we have consequent encroachment here. It's failing to breach, or sorry, to invert the first presented order block. Until we can close up above this, and I like that we've left a swing high here because that can be a secondary market structure shift now. Yeah, secondary market structure shift. But it's a new kind of day, new kind of price action. Okay. We'll see if that wants to be a market structure shift. Because there's still no first presented fair value gap, I can't see this as high probability price action. I just can't. Why would a 931 be first presented order block? Oh, actually, I guess it could be. Just didn't see it. I think this one's nicer because this is play reversal. But no, that's correct as well. My mistake. that should be first presented order block, you're right. And just regular one. Good eye, because I didn't see that. The function though here, everything I just said, I'm still looking for that. So close on this candle. Bit of a weak close, and still no fair value gap. So I'm content to just wait. So ES is quite weak. Nasdaq, although there's a divergence here, there's still no displacement. Now it looks like there might be some, but until we see the candles close, it's kind of hard to predict that. Okay. Right off the new day opening gap high. Now we have to work through this level. If we change the state of delivery here, that to me, if we can close through it with a strong, thick-bodied, not necessarily a fair value gap, but just a strong candle there, that would give me confidence in a continuation higher to take out this high. But until then, look, it's just traded too low. That's too deep a retracement. Now there's no fair value gap. It's not leaving any inefficient portions of price action. Take this off. Just short of mean threshold. Nasdaq. Sometimes you can frustrate me. The reason that's frustrating to me is because it's a very clear sign of weakness that our first presented order block. Thank you, Zach, by the way, for correcting me on this, because I wouldn't have seen it otherwise. If it's rejecting a mean threshold like that, and consequent encroachment isn't filled yet, and we're still in the first 30 minutes of trading, remember, in the first 30 minutes of trading, we have a likelihood of reaching consequent encroachment, more so than we have of, not reaching it. It's like a 70% chance. It does drop off for larger opening range gaps, but it's still there. And because we rejected that, there's also some lows here. And I don't want to marry the bias of running into this high. So I just have to let it do what it's going to do, because this is still not any clear price action. There's no inefficiencies. There's only really, one order block. It's difficult to read. I think ES is the first primitive algorithm. Yeah, ES does that one. We mentioned it, I just didn't annotate it because I'm a bit of a twit sometimes. Ooh. See, on the 5 minute, if I were just to look at raw price action, annotations aside for a moment, we have buy side damage, we have lows here, right? This is intermediate term low, this is just a short term low. But it's in a 50-50 spot because it's done work on the buy side. It's left the sell side, but the overall draw is to the buy side. And that's the condition I don't want to participate in. Like, not at all. Intermediate term lows are lows inside of PDOs. Yeah, so a low inside of an inefficiency would be an intermediate term low, or a low in between two short term lows. I should say and or rather. That's a bearish order block. If it wants to deliver to these lows, it should use this order block. Any deep retracement would put me off for the remainder of, well, probably until about 10:30. That's not me predicting it, I'm just saying. Can we use ES's first primitive value gap to gauge MQ's price by observing how ES is using it? Yeah, absolutely. You can always do that. Like ES does, nice and weak. Let's go through the matrix here. Potential CISD. On the 4 minute as well, that's nice. Same with the 3 minute. You see how all this entire range is just overlapping? It's pretty much one big consolidation. It's a balanced price range. So until we can leave this decisively, if we can trade out of it like that, full-bodied candles to the downside, that's cool. If we can do that to the upside, that's cool. But as long as we're hovering around here, I don't want to be doing anything. Just want to leave it alone. It's a regular day. Just be content with less. Ooh, YM's nice and loose for some reason. I'm not gonna lie, I kind of got my hopes up thinking we are about to leave the range on that one candle there, but we didn't. Boring. Oh yeah, sorry, I forgot to look at the comment. Alhamdulillah. Yeah, episode 12. How do you know what end up's time on the chart? Well, you can make it very easy for yourself and just use the last 5. Or like the last 7-ish. But I always have like 50 on it. People are like, oh, why do you have so many? But I select which ones I want to use. So I have this tool here with Trading View, Object Tree, and I have a bunch of new day opening gaps and new week opening gaps. I'll toggle them on and off based on where we are in the range, where we're trading. And they're all labeled and stuff. I don't have all of them on the chart. I just look at which ones are we in close proximity to, like 100, 150 handles around. Those are the ones I keep on. And the reason you don't see me do that is because I prepare those before I get onto the stream, typically. Because I do that at the beginning of the day. So, yeah. Hey! Finally moving. Thank you. Okay, that is. If you look at the regular trading hours chart, it's even nicer. Consequent encroachment and those lows. Hopefully, this can be the beginning of some increased, volatility, speed. At the moment, we've come out of a huge bounce price range. 30 minutes of just nothing. Took out the liquidity, yes. It's not a tradable move at all, but because we've had a larger spike out and it's a full-bodied nice candle, taking out the low, it's already taken out liquidity. I wouldn't try and take a trade into these lows or anything, but hopefully you can bring in some more speed and actual movement and displacement, because we still do not have a first presented fair value gap. We still don't. This one isn't good enough. It's too small, it's not clean, it doesn't really engage this low very well, it's overlapping this bounce price range. So, still bad price action, still no first presented. But at least we're moving. 3 cheers for Enki. No problem. How can the market structure shift up? Isn't slash didn't slash working, so in this case. Well, we're just in a very consolidating environment. I call that business cost, where sometimes you're just taken off guard by how the market is. And sometimes you can do your entire process correctly, and it still doesn't go in your favor. That's why P&L is a bad measure of success, because you can do everything correctly and have a losing trade, and if you think that's a fault on your part, it might not actually be a fault on your part, it's just business cost of being in this industry. Yeah, but there's no like significant, strong, clean run here. And there's still no fair value gap, so bad. It's weird because you have a large opening range gap. Yeah, there's a small new day opening gap, but there's a large opening range gap. You normally would want or expect some kind of good price action, especially when you're opening outside of the PM range with an opening range gap. With that, a large opening range gap, that's usually good price action. My guess is Wednesday non-farm payroll, hugely irregular. It's not anything that we ever really see. So yeah, a little tickle below midnight. Okay, remember, it has taken out these lows. It doesn't need to go all the way down to these extreme lower resistance lows. It's already done that. So I wouldn't try and take any sells. I wouldn't try and take any buys either. Don't get me wrong, I'm not looking for anything at the moment because there's no first presented gap. There's nothing that's very clean or strong. But I would keep in mind now that we're in discount. And although we might warp the lows, it doesn't necessarily need to because it's done enough work on the sell side after accumulating so many orders, because here's how I'm seeing it narrative wise. It put in these lows, fell short of it, and then it consolidated for whatever, 9:39, after 20-ish minutes at the open. So once it's taken out these lows now, we know it just created so much liquidity at these lows, it's just taken them out. It doesn't need more. Now, is that to say it can't? No. But if it wants to run higher, this is enough. It can go lower, but this is enough. And it's a nice dip below midnight, showing us some nice sensitivity. There's not really a strong reversal signature that we can get because there's no, good change to the delivery level. There's no inversion fair value gap that I can see forming. There's no market structure shift until we reach the bounce price range. So the reason I'm saying it doesn't need these lows, I just explained that. The reason I'm saying you don't want to be on the buy side either is because there's no reversal signature. And if you've been through the election number 6, I think was a recent one in the black belt model, even though this isn't a black belt, it's the same concept. When you have to get conviction in a reversal trade, it has to be through one of those reversal signatures. Is there a market structure shift? Is there a change to delivery? Is there an inversion fair value gap? If there's none of those three, how can you reasonably have any conviction in it doing a reversal? And there's nothing here until we can close above this bounce price range. Working through this is high resistance, so that's something, don't demand it. And I wouldn't position myself early on to break through the bounce price range because it's a high resistance thing to trade through. I know that probably just went over so many people's heads. 7 a.m. Smooth equal lows. Yeah, low resistance lows. Plus the opening range gap. 15-minute fib. I mean, I'm not highlighting this as something I'm going to reach into, by the way. I'm just looking at it. Just looking at it. This is a really clean order block, by the way. Actually, I like this color. Not gonna lie. I'm not saying take sell. I wouldn't, even though it's looking like a strong delivery. I wouldn't do anything. Not in these conditions. Yes, it's so much cleaner today. So much cleaner. What concerns me is we're still going to be left in this big range, which isn't fun. Not even fun to think about. How much nicer would it have been if it had taken it this high and started going into a discovery phase? And even if it had rejected off this SIBI, that's optimal trade entry of the consult of the market maker sell model. Sorry, market maker buy model. And then reversing would have been nice. Leaving it alone just means that it's going to be delayed. And then we're going to have to overlap all of this range again. It looks nice on the 2-minute chart. Runs up into the bearish order block. Falls short of mean threshold. Above 930 opening price. Premium sensitivity drops down below. Changes to state delivery. SIBI runs up into it. February midnight opening price. Rejects the consequent encroachment. Bearish order block on the 2-minute and the 1-minute. Down to the day low. But I don't really get a good read on that. Quick question, does trading through a LTL constitute an MSP? Yeah, long-term low, does it constitute a market structure break or must it be displaced through? It doesn't need to be displaced through necessarily, but the low or the high that you're looking at for an MSB must be created with energy and displacement. So when you have a very significant, yes, a long-term high or a long-term low, and this was created by a strong run up, and then we do whatever we're doing, and then it comes and displaces above that, that's continuation 101. That's exactly what you want to see. But you want to see it. Ideally, yes, you want to see displace through, but it doesn't need to. Even with a market structure shift, it doesn't need to displace through, but the strongest ones will displace through it. With a market structure break, it isn't as necessary to displace through it, but of course, that's the best case scenario. It's like seeing breakaway gaps in a run up. That's the best case scenario. But it doesn't need to displace through it because it's such a high energy high. If in that run up and it takes out this high and it's not a displacement, but there's breakaway gaps, loads and loads of breakaway gaps. That gives me enough confidence anyway to look for the continuation. But if there's, you know, back and forth choppiness similar to this lunky crap, where even in that run lower, it's a fast run lower. Don't get me wrong, it's a fast run from 956 to now. But other than this, there's no breakaway gaps. Everything's a common gap, even if there is a gap. There's retracements that I don't like. There's nothing that's being left open really, other than that tiny thing. If that was the case, up here, and we take out the high, but it's not displacement through it, then I have zero conviction in trying to take a continuation. So it's a combination of how the high was created, how much energy was in that high, how it was traded through, and then in the run up that takes out the high, how was that run engineered? Was it an algorithmically beautiful one-sided run where at least the lower half of each PD array is left open? Then I have a lot of conviction. If there's deeper retracements, if there's consolidations midway that are really not consolidations for the purpose of boosting price, but they're consolidations for the purpose of high resistance conditions, then I have less conviction. If that makes sense. Okay, that's London low. I was completely offside today, I'm not gonna lie. I wanted higher prices. Did that explanation make sense, by the way? Because I've never told that before. Yeah, brilliant. Might get higher prices after this. I would love higher prices after this. Unfortunately, though, I would not be confident enough to try and trade today because, not today, but the rest of the morning because of this. Unless it gives a really clean, super nice reversal, I wouldn't trust the session to play out how I wanted to play out. Especially nowadays, we're seeing more of an opening move and then staleness rather than staleness and then a run. But if the long-term low is not high energy, then it's not a market structure break. Wednesday for the IST launch macro trade? 100%, yeah. 100%. If we can leave, it doesn't even need to be the entire session, but if at lunch macro 1050 you see that there's mostly one-sided move and it's 1050, then you can look for a move back into some kind of intermediate term high, some kind of obvious liquidity pool or inefficiency, like this one. I wouldn't target that, but something like this. Just thinking 4 hours consolidating. Yeah. That's a lot today. Taken. So if it's going to reverse, what does it need to do? It has to invert this fair value gap, which, as you can see, it hasn't done. It's not an inversion gap. It's plain old. Not a sub over to City. I think we'll end it here today. I'm not interested in the rest of this session because of how it's started. Probably not in the best headspace because when I do something in the chart and I'm wrong, it leads to worse results in the rest of my trading for the remainder of the session usually. So I tend not to touch it. It doesn't matter if I took a trade or not. If I was wrong on something, I had a very high conviction in it. Like I had a super high conviction in this daily high getting taken out, and it didn't play out. You know, I can blame factors like the non-farm payroll being the Wednesday, the opening range gap being irregular, the open being irregular, whatever. But yeah, you gotta have self accountability. And because I had such a high conviction in it and I was wrong, and that's fine. That's gonna happen in your trading career. It happens to everyone, and it's not the last time it'll happen to me. It'll happen to me a bunch. It's gonna. You have to be wrong in this industry. But when it happens, I know that I'm not suited to get into a trade because that's a character flaw that I have where I'm not going to perform as good. So I'll never try and trade after I'm wrong on something, even if it's a tape read. Some of you guys think I'm some emotional, stoic being. Trust me, I have loads of emotions. I just know when to not let myself participate when I'm going to be triggered by them. So I know if I got into this right now, maybe I was looking for it to continue the sell-off, maybe I was looking for a reversal, it wouldn't be, no matter what I did, it would be me on the back foot, on the back foot, trying to recover mentally from being wrong here, with, some money made that would, I guess, give me further validation. So I have to not allow myself to engage the rest of the session. This is all because I'm NFP. Yeah, but well, yeah, because very irregular to have an off on payroll Wednesday. I don't even know if that's ever happened. So I will end the stream here. Thank you all for watching. I'll see you tomorrow's stream. It'll be the same time. I think it flows better when we begin at 9:20 instead of 9:15, because otherwise we're just waiting another 5 minutes doing nothing. See you tomorrow. Goodbye.